Today is Saturday, January 30th, 2021, and I'm your host, Max Gottlich, and I talk about my interpretations and insights into financial markets and the global macroeconomy. Well, apparently, this new retail squeezing out hedge funds phenomenon everyone is talking about is, in fact, a result of where capital markets are positioned in the risk range. In fact, we saw the second largest ever inflow into small caps in the US, and that was valued at around, I think, last I checked, 29 billion, roughly $30 billion just this year alone. But instead, retail investors across social media platforms, Wall Street Bets, FinTwit, they ignite this rapid sector rotation. We and gamma squeezes, and we've been seeing, which most recently is an SLV, the silver ETF, and you see these gamma squeezes being involved in stocks with high short interest, and it's been historically proven that highly shorted stocks tend to outperform during periods of reflation, right? So there's more speculative behavior for challenged companies. And in other words, fundamentals don't matter, right? And this past week, we actually saw this, the biggest spike in volatility in 3 years. Last Wednesday when the VIX spiked like 60+%, and even more interesting, which came from Bloomberg, is the actual spread between the VIX, right, volatility, and the S&P 500 30-day realized volatility. It hit its widest spread range since 1990. But today, instead of talking endlessly about GameStop, I wanted to do something a little bit different, which is, well, we've just started in the new year, and I'd like to analyze the Crescat Capital Q4 2020 investor letter. So this way we get a better perspective from one of my personal favorites, Tavi Costa. Hopefully one of these fine days we could have him here on the show and we can ask him all about this stuff. And one of the reasons I want to share this letter is, well, because they actually support the idea behind what they refer to as the Great Rotation. And that refers to the shift from overvalued growth, like mega cap growth and debt to, like fixed income debt to undervalued commodities. So that's the shift between those two. And he mentioned a huge list of preconditions responsible for this great rotation, and just to name a few, most of which, by the way, we've talked a lot about in past videos, right? I mean, he mentions first and foremost about the democratic sweep, which opens the gates for even more increased socialism, even more increased modern monetary theory, which will cause the twin current account and fiscal deficits to surge even higher. And it's almost like 25% of nominal GDP right now. And Bernie Sanders, we all know that he's now the chairman of the Senate Budget Committee. And obviously that's an equation for an explosion in fiscal spending. And of course, our biggest friend of them all, our biggest fan of them all, Janet Yellen, now Secretary of the Treasury, and of course she was the Fed chair, that is an equation for bigger government, bigger spending. He also mentions in the letter that, and we already know this, $120 billion every month in QE, divided between treasuries and mortgage-backed securities. We all know that. And the fact that the Fed may not be able to keep both interest rates and inflation down simultaneously. They may not be able to do that. And ultimately, and this is my view as well, I mean, I agree with everything this letter says. That's why I'm sharing it with you. But ultimately, the fiat currencies are being devalued against gold, and the dollar is being devalued against other currencies, although we only did see a 10% plus drawdown in the year of 2020. It's not that extreme of a downside move, but relatively speaking, and it's true because fiat paper currencies are not currencies in the first place, right? But they are not wired, in any shape or form. They're not wired in a debt-based economy. And it's that simple. So throughout this letter, it really suggests that there has been a huge wealth transfer from the government to society, to the people, which it's resulted in public debt surging to $27 trillion, just like M1, the hockey stick shape, which obviously is being financed with deficit spending, and trade balance actually reached its worst level since 2006. Not 2006. That's quite some time away. So that's all I really wanted to get into for the Crescat letter. And I hope from this, you can kind of understand the destruction of the fiats, which will lead to higher commodity prices, um, you unfortunately, a sovereign debt and liquidity crisis. So with that being said, well, I mean, the GameStop casino is closed until Monday. So take the time, do your homework, and prepare. All right. Thank you for watching, and I appreciate the support. And please note that I am not a financial advisor, and everything I say is for informational and educational purposes only. So thank you, everyone, and have a great rest of your weekend. Thank you.